The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome, trader and traderettes, to the headquarters of technical trading and investing, TFNN.com. I'm your lovable, squeezably soft host, David White, answering those big questions in the marketplace, like, is a hippopotamus just a really cool opotamus? Have you ever thought of that? Anyway, it is a great day out here, and of course everybody's got their party hats on because we've hit some new highs in the marketplace. So what's the first question we're going to ask as traders? Do we have any kind of the volume that we've had before in the marketplaces at these highs? And the answer is 2.5 billion shares so far. Of course, it is a Friday, normally a little lighter volume than the rest of the week. But not a rousing endorsement of this break above previous highs. We've seen so many of these of individual stocks have false breakouts. The question is this real or is it Memorex? If you remember that ad. Anyway, we are looking for a good day out here in the marketplace, at least for the bulls. Even some of those bears out there. There's a few stocks not moving. We're going to talk about the dog that didn't bark today. Those stocks that can't rally. Well, a day like this can tell you a lot about the stocks that do and the stocks that don't. My mom used to sing some kind of song about some girl that would do things that girls wouldn't. Anyway, I digress out here. It is a big day. We hit, if I'm not mistaken, go out here and find it here. 1618. So the 1.618, I wonder if that has anything to do with anything. The Fibonacci people will probably say that it's some kind of, the black helicopters are headed for us next. But looking at a lot of stocks out here, I've got a couple of them that I'm short, in $50, $100 stocks. I'm in a losing position by $1, so not feeling too bad at going through the top of these and maybe being on the wrong side of the market today. Some of the others, not so much, but we'll have to see how it all sorts out. I actually need to take a look. What else do we have out here? Okay. Well, we're going to go through a bunch of stocks today. You can always give me a call. For those that have been listening to TFNN last night, actually cranked out finally, gave birth to the Art of the Charts, a whole new charting system that chronicles Tom O'Brien's book, and a few things that I've tossed in here that I always wanted in features. We'll talk a little bit about that later in the show. Wanted to get into some of the stocks that had moved fairly strongly. One that looked like it had set up was LinkedIn, LNKD. Earnings out last night, basically telling everybody what everybody already knows, and that is that job growth is slowing. You wouldn't believe that if you read the headlines this morning. Wild job growth, 7.5. Well, as my dad said, figures don't lie, but liars can figure. The numbers out today could have been a lot worse. They're back in the sweet spot where I think the street thinks that Bernanke's going to keep on blowing on the big balloon that he's caused out here in the marketplace. And like I say, it's been Bernanke's giant bubble. I just get to live in it. But the question is, what's going to happen in the S&P now that we are breaking above previous highs? If we hold this and we get any kind of volume, the answer is the kind of bubble we saw in Bitcoin. We were asked a couple weeks ago, and I brought it up, when I think Bitcoin was trading around 120 bucks. It went to 250, 260 bucks, got back down to 50 bucks, popped up to 140 bucks. I think it's about 70 bucks again, and most of the Bitcoin exchanges are getting ready to claim bankruptcy. So the question is, what happens when you have these giant blow-off tops? And I think if you have to go no farther than Bitcoin just a few weeks ago to see what happened. The carnage that the dot-com bubble left behind. And if you really want a history in what we're going through right now, probably the closest parallel is a company called Long-Term Capital Management. In 1998, they almost single-handedly were able to bring down the entire banking system across the world. The Fed stepped in and basically triaged the situation. But it's kind of an interesting parable, almost biblical in nature. What happens when you get the absolute best and brightest and the smartest people in the room, and no matter what actually is happening in the marketplace, they believe they can just keep doubling up, and doubling up until one day they're going to win. There's a couple of books, I think. One's called Paving Wall Street and another one. But if you just do Amazon and Long-Term Capital Management, you'll pop up 4 books. I think I read 3 of the 4. I'd have to go back through my notes and look at them. But that's exactly what we have now. We have a Fed basically supplying unlimited or almost unlimited margin to push stocks with what am I going to say? Options with having a mental blank here today. Senior moment, I guess. God, why can't I think of it? It's that word. When a stock, someone in the den can help me here. When a stock pays money, dividend. Boy, why couldn't I think of that word? Probably because I've been up till 4 o'clock in the morning many days this week and just catching up on my sleep last night. If anybody's watched any financial TV shows, they've seen that ad from Interactive Brokers that we'll loan up to a couple $1 million on stocks that have dividends, and all for about 2%. So it's pretty easy to see why the market has gone this far. The question I wanted to see that I thought was answered on Wednesday, but the market doesn't believe them, and that is, will Bernanke turn off the magic elixir of huge, basically bond purchasing? And the answer is, at least from Wall Street's perspective today, is not. It doesn't matter how far they push this market up, how big a bubble. The question is now, will Bernanke, now that he's seen this hit new highs out here, will Bernanke continue to allow the market to go higher and then face the problem where he may not be able to extract himself from the market? We put in $1 trillion, or at least the Fed has put in $1 trillion, or 1.2 trillion, I think it's 1.2 trillion dollars over the last 12 months into the system. For that, they've gotten, for every $550,000, one job. Now, again, this is money that's loaned and theoretically is going to be repaid. But what happened if something really bad happened? Would any of that money get repaid? Or would we, and have we just created a giant bubble out here of huge loans to the largest companies? Of course, if you're a company out here that has, I want $1 million in revenues, $2 million, there's not a chance you can get a loan. But if you're Apple and you want to avoid, $35 billion in taxes? Yeah. What do? You just borrow all the money, give it back to the shareholders, and avoid that for the price of about 3%. They get to keep their cash. So I guess Marie Antoinette was right. Let them eat cake. They can have their cake and eat it too, actually. And that's exactly what Apple did. I think they started off with $17 billion. But the idea is that they'll be able to continue borrowing that money while keeping their money overseas and never repatriating it. Would make you think that somebody in Washington would wake up, smell the coffee, know that it's a new day, and decide to drop those rates for taxes, for corporate taxes in other parts of the world, and collect maybe 10%. 10% of billions and billions is a whole lot less, or a whole lot more, than 35% of nothing, which is what they're getting today. And it doesn't matter what they do. If they decide to start raising taxes, they'll just move all the corporations overseas, and there won't be anything in the United States. So the question is, will they wake up to reality, or are we going to be stuck with a system out here that is just wrapped around the idea that socialism truly works? So anyway, getting caught up on a few things out here. We were looking, wanted to go right to the stocks that are moving the most. Up strongly, the big winner, at least on the S&P or in the NASDAQ 100, is Seagate. They had a huge pop out here, about a 4% STX. And let's take a look at these as they're strong. Now, a lot of these stocks were just starting to break out. Yesterday, fairly interestingly, was the big volume day in Seagate. We have not got that today. They needed about 15 million shares to break out. You got 14 million shares yesterday. Today, much lighter volume. Again, using IBM as the model for a lot of these tech stocks and the other stocks is the false breakout. When earnings comes along in the bright light of day, the stocks come back. Of course, it doesn't stop everybody from buying IBM once again, because of course they've got all this money burning a hole in their pockets, because it's almost free because the Fed keeps pushing it. But anyway, Seagate, very interesting. No follow through on the volume today. I got to take a drink. And it'll be interesting. Other stocks moving out here is Expedia. It was up. Of course, it's been down fairly strongly, XPE, after earnings. This thing has been weak for all of 6 months out here as it moved above $60. There's been very little or any volume. Of course, it finally came home to roost. And kind of interesting. We've got a little pop, but it went right back down to support. Not a big deal that this thing did bounce. It did have into this support area that's been filled. Very strong volume. So support is going to lay here, but it was on the October 26th move of last year. This thing whipped up with over 13 million shares. Came back into it with 2.7 million shares a couple of days ago on May 1st. And that is popping out here, no big deal. But it did come down on very extensive volume. So what's setting up here more likely? A trading range somewhere between the $56 and $66 range. Again, this is Dave White back on the Power Trading Hour. You can always give me a call at 877-927-6648. That's 877-927-6648. Did I give you the phone number? We'll be back in a minute.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we have Steve, our engineer. If you call 877-927-6648, you can talk to Disco Steve. He's wearing his blue little golf hat today. Huh? Purple. Oh, purple. I'm colorblind. It's hard to tell. Anyway, you can talk to Disco Steve out there and see what he's up to. And then talk to me, 877-927-6648. Of course, if you've been listening to the ads during the break, we've got a new piece of software out there that you can have now. It is Art of the Charts. Puts together most of the stuff that Tom does and some of the stuff that I do. One of the things that I wanted to do and believe in is that a formula that can mean anything means nothing. If you don't have the inputs with some kind of formula, then you're just kind of pulling them out of your rear end. Ooh, that's pretty nasty, isn't it? Anyway, so what I'm thinking about here is I wanted to automate it, be able to test it, and know when and what the best parameters for Gartley's were. To my knowledge, no one's ever extensively tested them because, of course, you have to define them. And this goes back a year or so. We had Larry Pesavento, we had Steve Rhodes, we had a bunch of other technicians that we talked to, and we actually it took months beating out what actually makes a great Gartley. There is some things floating around on the web, but the question is, how do you know it and what is it? And we put a lot of that into the software here. Rules, trying to figure out how to find it. And of course, once you have rules, then you can draw on your chart and make sure it looks pretty good. One of the ones we have setting up here that is interesting is Advanced Auto Parts, AAP. This thing's got a nice little gap down in the 85, 74 range and a little higher if we zoom out a little here. So you can see it. That started the huge gap down from, what is that, May 14th of last year. So getting close to a year here. And what do we know about that? It came down on monstrous volume. You had huge volume down, what was it? It's even more, 6.8 million shares down. This thing kind of burnt out. It's come back up here and filled its gap. Man, this is where you're going to start seeing a long-term resistance in some of these. The D target on a bearish butterfly on this would be 87.80, which is right in that sweet spot of that little one. So if you get the art of the charts and actually subscribe to it, these kind of scans will be in, you'll be able to download them almost instantly. Somewhere around 7, 8 o'clock a night each night. We set up a server to actually sit there and crunch the numbers, and I kind of sweeten the list and get rid of the falses as much as I can, and ones that are probably not interesting, and then you can download them later. And oh yes, we're going to have a webinar. Tom O'Brien and I will be sitting through on Wednesday night. We'll be talking some of the features out there and probably getting a little bit more in depth. But at the same time, especially if you're new to the program or all of TFNN, most of the traders here will be talking in words that maybe sound like French or maybe even cussing. I don't know. But if you're wondering how ABC works, what confluence numbers are, a lot of all the jargon that we use, and you haven't read Tom's book, or you've read it, but you just maybe didn't visualize it as much as you'd like. There are introductory videos that show you how to use the program, but at the same time, you'll be able to figure out how a lot of these things work. On at least a basic scale, or maybe you're interested in getting Tom's book. But I would say that that is the first stop and the best $20 you can spend in trading. Once you understand it, then the art of the charts is great for letting you actually implement the timing of the trade system. Anyway, what do we have here? Anyway, pretty much the end of it as we look back and that gap coming back in. I wanted to see what else we had out here. In the winners out here, you know, you got most of these. Oh, I need to actually sort these out so I can see winners and losers. There we go. So we had Expedia, Crees up about 2%. This thing's been on fire. CRE. And we're looking at this one. Let's see, take a look here. Oh, we'll have to talk about it when we come back. Again, you can give me a call, 877-927-6648. That's 877-927-6648. I am back, folks. We've got this program launched, and I'll be back sitting in the coveted Tom O'Brien chair for my close-up Mr. DeMille. Every day between 2 and 3, same bat channel, same bat time.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, we got a couple of phone calls, so we're going to go through them fairly quickly here. We've got John from Philly. How you doing today, John?
Hey, David, looking forward to seeing that new product in action Wednesday.
Okay. What do you want to look at today?
I'd like to ask you to pull up the daily chart, maybe the weekly, on XLB. It's the Spiders Materials ETF.
Yep.
It's right at highs. My question, David, if this gets through the highs, where do you see this thing going? Can you share what parameters you might be looking for to answer that question?
Well, here's my thought on it, and that is that we're breaking above previous highs with very light volume. I suspect that as far as extended models, especially with the forecast that we've already got now from the S&P 500 companies that have already reported, that we are officially in a bubble, And I wouldn't, I could see not this particular stock, but I could see us run 400 points in the S&P in, 6 months, 5 months, 3 months. Because basically, if we want to look at it, I actually wrote about it today in my newsletter. Bitcoin is the exact example of what we want to be looking at here. We're at highs that are not financially sustainable in the marketplace. So any higher that we go out here, and it's happened before, we could have a rip out here that just would not quit and get all the investors in here at the top. If the market pulls back and cools off a little, maybe something. If we start moving here, it's nothing but open room, and I'll guarantee it'll be an orgy of buying that's almost identical to the 2000 level on the dot-coms. People just couldn't put their money in fast enough, and it's going to blow up just as quickly. So to me, especially today when I'm looking at 2.5 billion shares going in and breaking these highs out here, if we do continue to go up, we could go up just like Bitcoin and we'll come down just as fast. So, that's what right now I'm really afraid that we won't pull back and this market will cool off. If it continues moving up from here, especially when we look at companies like IBM that have been blown away with bad earnings, only to be rebought almost immediately. All the forecasts don't say that they're going to grow any. In fact, IBM hadn't grown their revenues in 10 years. Well, they've made their numbers by continually firing people and cutting costs. So the question is there any economic model that actually defines any higher prices from here on the S&P? And I just don't see it. So, I'm going to say that I rode the bubble up in the dot-com phase of the marketplace, and I think we might have the exact same thing. We may have literally a runaway market. So I can see what you're seeing in the thing. When markets like this do not fail in the past on volume, they tend to turn out to be horrifically huge bubbles. And I don't think we have to do any more than look at 2 weeks ago to see what Bitcoin did. Went from what, $120, I think, when you called, or maybe you said something in the den, to $260, down to 70, back to 140, and last I heard today, there were several of the exchanges for Bitcoin claiming bankruptcy. So that's kind of the tale here. I just don't see any economic justification for higher prices here. So, do markets go higher than that on non? Yes, but they eventually revert to the mean, and that's what I'm scared of. So when I look at something like XOB, 3 highs, each one lighter volume, I have to wait and see how today's volume come out. But it's certainly probably not going to hit that 11 million shares, which is probably what you're looking at, right? That January 25th high out here on 11 million shares. You had it with 8 million shares at $40.04, and then we didn't quite hit the $40.04. Maybe you'll hit it on Monday or something, but certainly looks like that kind of thing. But yeah, nice gap up, light volume out here. Is this the last gas of a market at the top? I hope so, because I'd rather have a small pullback and maybe really break out that 1600. I'd love to be bullish out here, and this market could make me. But I'm going to have to see some volume that we just aren't seeing now. 2.7 billion shares as I speak.
Great. David, thanks for your eyes on that. I appreciate it.
Okay. And we've got Walt from Denton, Texas. How you doing today, John? Or excuse me, Walt. Are you? There you go. How you doing?
I'm doing fine.
Oh.
I had a question. What is your take on Valero, VLO?
Well, it's just come down and it's filled this gap that it had. So it's going to be in fairly decent support or a support area out here around $38. It gapped up on the 28th of January with decent volume out here. What, 25, almost 26 million shares. It's gotten back into that the first time on April 17th with 8.3 million shares. went below it on higher volume out here at 10 million shares, and now it's pulling back in here. I'd love to see maybe a little bounce out of here, a pullback below that $37.67 low, again on lighter volume. The only thing I dislike is that we do have more volume yesterday than we had on that April 17th low. But, I mean, it's compared to that huge gap up day of 26 million shares, still very light, right?
Right.
So the only thing I'd say is I'm just looking for this thing to actually find a bottom out here. It's probably going to bounce a little bit and then pull back. And if you get, I'm going to say like 4 or 5 million shares one day, just no selling pressure back out here, I'd like it. I mean, it's a good-looking stock. I think that most of the prices on crude and all that stuff are headed down, but the last few days have proved me wrong. So, you know, I still think that there's it could be a big surprise on the downside in energy, but at the moment, this stock looks extra good. So, thanks for pointing that out.
Okay.
Any other questions?
Yes. Well, 2 others. One was another stock, QCOR. QCOR?
Yeah. Questar Pharmaceuticals. So
Right.
what's your question on this one?
Well, it looks to me like it's right up at the top. I was wondering how that looked in light of your charting patterns, the Gartley pattern, if that.
You know, the one thing, I'll give this caveat. One, I hate being in pharmaceutical companies because you always get something out of the blue, either positive or negative. They're incredibly difficult to trade. I don't trade in them for that reason. The BBH used to be a good way, or some of the ETFs, but there's so few of these companies left anymore. It's not a whole lot different than buying the individual stock, although it's, you know, you don't get the upside. You certainly have the downside risk in these. You know, this thing is going to have a huge amount of resistance anywhere from here up on that huge down day. Again, the reason why I don't trade these things. On 9/19 of last year, it came down on almost 64 million shares, and it's back just into the tail of that. If I was going to trade this, I would hope that I got to retrace back down to the 1725 one last time on extremely light volume, because I think that's probably the only safe place to buy this thing. If you are going to buy a pharmaceutical company, because it's probably it's got that high volume low right down there around that 22.26, kind of pierced it for a few days. It's kind of been above that for a while. But I would not be surprised if this thing could pull back 50% in price. But certainly maybe that 22.26 spike down there, the September 19th low. On pharmaceuticals, more than any other stock, you've got to just buy them and wait until people are screaming and telling you that the company's going out of business. About the only time you have your back against the wall. So, and I can be right or wrong on a lot of stocks. The one thing that I do know, though, is the headline risk on these is enormous. So I tend to stay away from them. But that's just me. Are you a doctor by chance, or were you a doctor?
No.
Okay.
No.
I mean, unless the one
I don't even play one on TV.
Though I've only seen a couple of people that have really been good ever in trading pharmaceutical stocks, and they are all doctors. So it kind of tells me that you need kind of the inside skinny on what's going on in the marketplace. But maybe other people are better at it than me. But the ones I've actually seen do well in it were all doctors. And I figured they knew something. So anyway, thanks for the call.
Thank you.
Walt in Denton, Texas. I'm trying to remember where that's at. Anyway, we're going to go through some other charts. You can give me a call like John, like Walt, and join the TNF in club here. And hopefully you called Steve Disco Steve, which is the way he loves to be called when you call in here, for the kind of music that he enjoys, but make my ears bleed. So anyway, we've got other stocks out here making light volume highs. This one's actually giving a sell signal today. AIZ, Assurant. You wanted to see this thing, especially on a day like this where the market's really trying to breakout. This one's kind of interesting in that you can't get much volume, and it couldn't hold the previous high. The one I'm looking at is April 11th, 2013. And that is 1 million shares at $47.86. Goes above it today. Nice little spike out here, but right now, what are we looking at? Yeah, good 30 cents lower than that previous high out here. So probably a false breakout here today. Other stocks that are of interest is Cabela's. Again, this one has been trying to break out. Had a very nice volume, but not a lot of follow through either. But this one certainly I would be watching if this market does decide to continue higher, because it did break the previous high with almost twice the volume. And that is very rare, especially lately. Cabela's symbol is CAB. What do we see in this? That previous low, or high, on March 13th, 1.3 million shares. Just rockets through it with 2.55 billion shares, million shares yesterday. But what I dislike is even today, just not a lot more going on out here now. Maybe this thing is going to pull back to this gap, which is what I'd really like. On just ultralight volume, maybe back to 59 bucks, and then maybe this thing is where that thing's going to catch fire. Certainly wouldn't be shorting it. Dean's Foods, another one of these that's breaking out or trying to break out today at highs. We are looking at Dean's Foods. Of course, Whole Foods, I think, is out Monday or Tuesday with earnings. So we've got Dean's Foods out here. I think a little sympathetic movement out here, but certainly no volume. We've seen the last major spike out here on October 22nd of last year, busting that right now with about 1/3 of the volume. It'd be kind of questionable on how this thing's going to close, but a lot of these stocks out here. We've got Barb from Seattle, and it's how you doing today, Barb?
Just fine, thank you. I'd like your opinion on AMRI. Does this have an ABC up?
Maybe an ugly ABC up here. Hang on just a second. Can you really... Let's just go down here a little bit. I mean, I guess you would say a complex ABC up. Let me put it that way. So hang on a second here. Let me clear this out. You really... you could give it. I just dislike that the last two lows out here were so close to each other. But, yeah, you could say it's an ABC up. It gave you a projection, $15.56. Albany Molecular Research. Do you know what they do?
They're research, some type of research. I'm not sure.
Well, let's find out here. Contract Research and Manufacturing Organization, Drug Discovery, Development, and Manufacturing Services, Pharmaceutical and Biotechnology. So I guess they service that field, but really don't make anything themselves. So that'd be interesting. Assay development, screening libraries, natural product custom synthesis, library synthesis, medicinal chemistry, computer-aided drug discovery, in vitro biological technology. So they've basically all the tools that other people use to make drugs. So, and the services they need to make sure, assay services and other things like that, and software tools. So basically, they make everything that the pharmaceutical researchers actually need. This thing, not so bad. I kind of dislike, you really wanted to see this thing probably get through with 1.5. You want to hold through the break?
Sure.
Okay.
Thanks.
Be back in just a minute.
Are
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Baby, let me be your loving teddy bear. Put a chain around my neck and lead me anywhere. Let me be, oh, let him be your teddy bear.
And thank you, Disco Steve, for another interesting. Anyway, we're talking to Barb from Seattle about Albany Molecular Research Company. The one thing that I dislike about that stock is, it did have a nice test, a lower low out here of that $9.06, but really what I want to see is 1.1 million shares. And as I go through this, 900, 600, 450, I mean, I just don't see anything that looks like the million shares of March 13th out here. See what I'm looking at?
Yeah, so you're looking at the 425 high or breakout?
I'm looking at the March 13th high out here.
Oh,
right?
Okay, 1144?
Yeah, 1144. Now, if I go straight across at 1144, what do I get? 900, close, right? 200,000 shares short. And then the next few days out here, I just don't see anything that I'd like to see that thing break more than 1 point. I wouldn't short it, but from what I'm looking at here, I want to see this 1144 broken with some kind of sign of strength, and I just don't see that yet. So, right. I mean, do you have an ABC up? And maybe in this market that's bubble-licious, it just doesn't matter. But it certainly looks like, I would just say that if I was going to be bullish out here, I think that there are better stocks. I do like the first day out here on 422, decent volume, but still not anything close to that. And, when I look at a couple other stocks out here, make me start wondering. I don't know if you saw them, you in the Den or on Tiger TV?
No.
Okay. Well, I'm going to show you a couple of them here that make me start to wonder about today. Dunkin' Brands, DNKN out here, testing its last high on less than 50% of the volume. There was a couple other ones that I saw over the thing. We've got Occidental Petroleum out here trying to bust out its high. It's couldn't do anything really today. If you want to get here's a freebie. It was in my newsletter today. Now look at this one. QIHU out here. Previous high, almost 8 million shares. Secondary high on March 5th, 5.6 million shares. What do we got? We got 1 million shares today. So there are a lot of these stocks out here. Again, I think we may have enough to push this market higher. This may not matter, but I'm going to say that the danger signs on a lot of these stocks are way out here. I wanted to look at the volume today. And what I would say is if you were thinking about still going long on that I would wait till Monday. If we get some volume in this market, let's say we get like a 4.5 or 4.8, 5 billion share day, then we're off to the races. Look for the biggest balloon that you will probably trade in your life, and that will be it. But 2.8 billion shares so far today. I want to see something like 5.5 billion shares that tells me this market's for real up here. And I know I sound like a broken record, but to me, there are a lot of low-hanging fruit on the short side, and there are a few stocks out here that are really doing well, but a lot of these are busting out. I didn't get a chance to look at the housing stocks yet today, Ryland. But even Ryland, which is one of the strongest stocks out here in the marketplace, not a lot of volume, not a lot of push out here today, even a little hammer. So, I'm thinking that if I wanted to go long this market on this breakout, I would wait for a pullback to like 1595 on the S&P. And if your stock hangs in there and the volume is light, then I'd pull the trigger because I'm pretty sure we're going to get a decent pullback on Monday.
Okay, great.
And then if you want to go long, that's where your risk reward will probably set up. Thanks for the call, Barb, and we'll catch you in the first hour of the Tom O'Brien Show tonight.
Thank you very much.
You bet. A little bit of Tech Insider, a little bit of Art of the Charts. We'll see you then.